Hello accounts people. Quick introduction, my name's Andy Harrison. My videos are raw, unedited, I don't have the time to edit. You'll need to get used to a bit of sense of humour and my Birmingham accent. It's not that bad once you get used to it. I teach at a variety of colleges throughout most of England, have done so for many years, and all I can say is I hope they help as many students as possible pass AAT exams. They certainly have quite a lot in the past and will continue to do so. I also have a level 3 and level 4 channel, the current one that's being updated quite rapidly at the moment, Andy Harrison AAT, and there's an older one, much easier to Google, channel Andrew Harrison AAT, but I can't update that or access that one anymore for technical reasons. Double entry, that's what we're really interested in, the language of accounting. We're fully aware not many companies use it for everyday recording, but we use it to understand what's happening on a computer system. We need to know what it's doing and be in control of it rather than let it control us and just learn which buttons to press, ringing up people when we get stuck. We can then correct our mistakes on the computer system or a manual system, or correct somebody else's mistakes, and then we'll do lots of end of year adjustment that's mainly level 3 work. And then unusual items, you might see an accountant doing something, sketching out the account, they're using their double entry knowledge to work something out. And of course you need to understand double entry to pass any kind of accounting qualification. The videos will be in 4 stages. We're interested in stage 1. You can pause and have a look at what's coming up later. So double entry revolves around ledger accounts, T accounts. I called T just because of the shape as a T. If all the other lines weren't in, it's just T. And as we look at them, debits on the left, credits on the right. This is a completed stationery expense account. It's got 3 columns. You might see 4 or 5 columns. Occasionally you'll see exam questions without the dates in. So date on the left, item or details, usually signposting the double entries. And the story of this one is that on the 1st of January we'd already paid out £10 for our stationery. We've got a couple of invoices coming in on the 2nd and the 3rd, and then we bought some for cash. It's still a station expense whether we pay an invoice or whether we pay for it in cash. And then we must have sent some back, a very small item. So what we have is 2 columns that add up to the same, and the totals are quite important. It just literally, we want them to be the same. It proves we balance off the account correctly. So the closing balance on the, when we decide to close off our accounts or balance off our accounts, just makes a column add up correctly. This is what matters, because this is what we're going to trial balance. This is how much we've actually spent on stationery so far the current year. So before we go and put some entries into it, just a quick recap. You can pause this and have a longer look at it if you want, or if you're fully familiar with the difference and being properly tested on, do you know your revenue from your expenses, assets from your liabilities, skip ahead. Most items in accounts are expenses. They will mainly be debit entries in our ledger accounts. There'll be debits in the trial balance as well. Things like rent, electricity, stationery purchases, wages, lots of expenses. We'll have an opening inventory. That means something we'd already bought the previous year. Although we paid for it, possibly we may not have paid for it, we're just going to add it to purchases, which of course is a debit. Depreciations are an assets, vehicles or something being spread over the year. It's an accounting adjustment. Discounts allowed causes more of a problem for students. Credit customer pays us quick, so we let them pay less. Well, it's okay letting somebody pay £9 when they owe you 10, but that £1 is the expense it costs you. And then closing inventory, not much in this on level 2 hopefully. These are actually adjustments, so they're not from the ledger accounts. We credit because we haven't used it, we're reducing our purchase and transferring it by turning it into a debit for the following year. Then our revenue and income accounts, so these will mainly be credit entries. Revenue is things like sales, from buying and selling of goods or making goods. Income is non-trading activities. Well, if we've got lots of money in the bank, we'll get some interest. And discounts received is the opposite to allowed. This is we pay somebody quick, so we get a reduction in the cost, but it actually comes in as income, not revenue. Then we have a mixture of assets and liabilities. So current assets are short-term assets. We'll sell it or it'll change rapidly. Things like our inventory. And then non-current ones that will be there for a longer time. So we control these and we're going to use them to create value for the business to earn some money. So even though we might owe some money on our vehicle, we control it. We will have a liability account as well to show how much we owe. Receivables and debtors causes a few problems initially with the wording. A lot of people still use the term debtors, but it should really be receivables, but Sage still use debtors, so that people that owe us money. The opposite to that, and easier to remember, is it's a liability. If you owe money to somebody, it's a liability. Creditors, the old term, payables should be in modern day accounts. VAT is usually a current liability. We owe money to HMRC, we're going to pay it quickly, but there are occasions that it might be an asset, so it can go the other way around, just like a bank account can be either side. Bank loans, so sources of money, we owe money to whoever we loan from, and assuming it's a long-term issue, it's non-current. And then our capital account, so our main one, of course, capital. Sole trader ties some money up in the business, puts some money in the bank account to start it off. You'll see that in a few seconds. Its shares is the equivalent for a limited company, or equity, we start to call it for a limited company. Drawings causes lots of arguments. It's the owner taking out their own capital. Some tutors tend to cheat and call it an expense, but that won't stop you passing level 2 or even getting 100% at level 2. But it will cause all sorts of arguments and problems at level 3. So think of it as a reverse of capital. It is a capital type of account. So on with our exercise then. So Shantia is starting up a business and she's going to put some money in the bank. So I have cheated here. You won't see the word in on any bank ledger account, but you can always write it in if you're doing an exercise on paper. And if you get used to the bank being in and out, debits and credits, that goes a long way to remembering which side all other credits and debits should be, or which side all other transactions should be, whether they're debit or credit. So this one then, in the bank, so number 1, and she's putting in her capital of 10,000. And we need a double entry, so our debits equal our credits. Then we're taking some money out of the bank, so it's the credit side of the bank, and turning it into cash. Hopefully she's got a safe, and then it'll come in cash. So cash is the same way around as bank. There we are, debits and credits. Now this lady has already voluntarily registered, possibly because she knows she's going to buy a van and can claim the VAT back on it. If her customers are all trade customers, doesn't make any difference because they'll claim the VAT back. So they're not bothered by the extra 20% that she's charging them. So £1,200 worth of goods for resale. So it's got the breakdown here, 1,000 plus VAT. So what comes out the bank purchases 1,200, that's our credits, and then our debits, we need to work it out. Well, it's already worked out for us, so too far. Yeah. The net, not including VAT, and then the VAT goes the same side as the purchase. It belongs to the transaction. Hence the description as purchase, not bank. And then we've now debited 1,200 and credited 1,200. Debit card tells us it's out the bank. So motor van 8,400 including VAT. Well, it doesn't come out the bank. The cash, there's only 500 there, so a bit of an assumption. Including VAT 8,400. So we need to work out the VAT from total including VAT. If we take the 8,400 divided by 6, working downwards, divided by 5 if we've got the net working upwards. So £1,400 VAT, paid 7,000 net or excluding VAT. So next one, nothing to do with VAT, that'll make life easier. Insurance for the van. So again, get used to which side on the van. It's an expense to do with our motor van. That'll do, because that's the account we've got actually. So we change the names, it could be motor vehicle expenses if we've got vans and cars. But this is our motor van expense account, which is fun. I made the assumption it's coming out the bank, probably a direct debit. Another purchase, 2,400 including that. So including that for the bank. But we need to work it out. We could also divide by 120 because it is strictly speaking 120% times by 100. Or actually 120 because it's 20% of that. So £400 VAT, that's a sixth of 2,400. So our purchases account will show this, number 6, 2,400 debit, 2,400 credit. Now she's at least got a sale. About time she started earning some money. It's all been going out at the moment. So bank transfer, 2,000 plus that. So what will come into the bank? We've just done the sums, 2,000 plus that. We know what that is. We know it's 2,400 debit, 2,400 coming into the bank. It's the same as that, including that. So we now need to go down to our VAT accounts, and now we've got the VAT. Sales account is the Lincoln's 400 VAT. One of the students find it easy to remember. We used to credit sales. So some of these you'll find easy to remember, some of the debits and credits you don't, but if in doubt, revert to thinking about the bank and how it works out as an in or out the bank. And just make sure, so 2,400, that's why we've now got entries on both sides of our VAT account and our sales account. So cash paid, £48 worth of diesel. I'll do this one first. So we're now on number 8. Motor van expenses. As we've got the total, sometimes it's easier to work out the VAT first. £8 VAT out of 48 means my motor van expense. Is 40. Thinks it better, describes it better. Bank loan, nothing to do with VAT on a bank loan. It's coming into the bank. So the more you do these, the more you get used to which side everything goes. So into the bank, and in the liability we owe the bank £4,000. So we've got a nice bank loan account here. So that's that one posted, and then we're getting towards the end now of the transactions. So we'll just be balancing it off and checking the maths. We're going to post off some goods, incurring £11, which we're going to pay in cash, and then we've got a sale as well, should be. So what have we got? We've got cash, so 10, postage, £11. Postage got no VAT on it, doesn't say so, but stamps aren't battable. And then where do we record that 11? So sometimes you have to think carefully about what account. Have a look at what you've got, create one if you don't. Well, there's an ideal one. We haven't got a postage and stationery account, so that's fine. Admin expenses. Admin's like a bucket for any odd expenses that we can't find an account for elsewhere. But now we need to sort out the sales, so we've got to check. So that's coming into the bank, 3,600 including that. That'll help our bank account, or her bank account. And then, nice easy maths actually. £600, 600 VAT, and 3,000 net, 3,000 plus that. One last item then, she's taking £400 out of the bank to live on for her own use. It is drawings. We've got the drawings account conveniently. If not, create it. There we are, doesn't do with VAT. So now the instructions say balance off the account, and then we'll use the brought down balances to check that our debits equals our credits. We've got a little table set up ready to do so. So now all we've got to do is balance off our accounts. So the balancing off process is sometimes a bit tedious, and sometimes it makes a lot more sense. So the one that will probably be tedious, because this has only got one transaction, we've got to make everything add up to 10,000. Well, there's nothing on the one side, so carry it down there, and then it will be brought down first day of next year or whatever as 10,000. So when it's only got one entry in it, it's pretty obvious which way around it's going, and very laborious. But this one makes a bit more sense, a bit more serious work. So we need to work out how much is in our bank, and possibly do it on a calculator separately. If we do it, because I'm on the spreadsheet this way, so what we've got, we've had 20,000 in, 13,350 going out, so our carried down will make this number equal this. There we are. So we've actually got 6,650 left in the bank. Should I say exactly it has. So that much in my bank at the moment. So there we are, brought down 6,650 positives. That's what's actually in the bank as an asset. Cash account, pretty much the same idea. If I use that 18's just the date added up. So 559 out. Cash, of course, can only be one way round. West Bank can be both ways round, which is talking as I'm speaking. Yeah, £441 cash. And then some nice easy ones to do. The next few anyway. Occasionally you get extra rows that really confuse students. And that's just the total of those, so it's only one side. And a motor van also. There's only one side. There we are, so just 7,000 brought down. This one's going to be nice and easy as well. Just the two added together, just to prove it. 490 brought down. So VAT is one that can go either way, so at least there's a bit of serious maths to do on this one. In or adding up the dates. we've got a carry down in this case on credit side. Didn't really need to type that for me, I'm sure you could work that one out. And that means we've got an asset, so HMRC Shantia, £1,008. Wouldn't normally be the case, it's just because she's claiming back £1,400 of VAT on a motor van. Well, she doesn't buy a motor van every quarter, every month, so it wouldn't normally be the case. So nice easy ones now. Gets a bit tedious after a while. Don't blame me, just skip forward. Let's see if you're watching it not for the first time. We're going to use these numbers in a minute. Even this one, pretty obvious where it's going to go. Shouldn't be quite too much maths. And this one again, it's still got to be done. So you won't hear many students saying they like balancing off accounts. You've just seen why. All balanced, all correct hopefully. Well, if they're not correct, if I've added up something wrong, or put something the wrong side, put a carry down and brought down the wrong side, it will show when I add up at the bottom here my debits and my credits. So trying to remember as many as possible to jump. We know the capital, that's easy, and we know the bank, so let's get down. So the capital was 10,000 and the bank was 650. We also had, and I'm cheating, looking at a printed copy, 4,401 in our cash, and we'd spent 3,000 on purchases, and we've got a £7,000 van, £490 worth of motor vehicle expenses, and the government owed us £1,008. So sales, start to even itself up, £5,000 worth of sales. So these are just the brought down totals, 4,000 in our bank loan account. Our admin expenses came in at 11, and she took out £400, and our debits equal our credits, which means we probably haven't made a mistake, although there are mistakes we could have made if you've got something completely the wrong side. But there are other ways of checking it, as you'll learn through level 2. So just a quick, some people use mnemonics to remember debits and credits. There's various ones available. Ear and lips isn't very common, it's not in any of the textbooks, but it's expenses, assets and receivables. This means that either in the trial balance or for most entries in the accounts, they're on the debit side. And the same, liabilities, income, payables and sources. At least it's technically correct. The older ones that are still valid, whichever one you remember is fine, because it works. So pearls, very old, very traditional. Purchases, expenses and assets. Revenue, liability and sources. Dead click. So debtors and creditors obviously is the outdated language, so that's why I don't particularly like this one, but expenses, assets and drawings is useful, liabilities, income and capital is useful. And that's our stage 1 double entry done.